Welcome to the March 29th weekly report on SuperGrowth MultiBaggers. Today we're going to take a look at the company that appreciated the most in the last week, the biggest loser. We're going to take a look at positions sold. We didn't do any buying over the last week. We'll also take a look at Perkin Elmer, a company with particularly strong financial statement trends that ranks as one of the higher SuperGrowth MultiBaggers. Okay, first we'll take a look at the market level and our general risk assessment, which is based on the level of the Standard & Poor's 500 relative to our indicated algo pattern recognition software indicated buy at and sell at price. Basically, the way it works is the higher the market goes, the riskier the algo determines it to be, and the closer to the buy at level, the less risk that is considered. So right now the market is trading around 395, the indicated buy at 360, the indicated sell at 411, 8.75% from buy at, 4.2% from sell at. So what that generally means is we're closer to the sell at than the buy, therefore risk is higher. It's not exceptionally high. It's new purchases around 3% of portfolio. And in general terms, right now actually we're kind of hovering on that level between new purchases 2% and new purchases 3%, and it often shifts back and forth in any single day. So here you can take a look at it a little more closely, although the sell at is actually right off the chart here, so it's a little difficult to sell at 411.28, 360.23. These change constantly throughout the day, so they might go up as much as 50 cents or $1 over the course of a day, but they're reasonably stable. The software is constantly looking for patterns that repeat and then seeking to take advantage of them. All right, sales in the last week. We sold NBIX at $100.12. Current price is 102. Latest indicated sell at price 101.92. Again, this is constantly changing, so it's when we sold it actually earlier today, the indicated sell at was $100.12, so it's constantly going up and down. And ERFSF, we sold it at 102.95. The current market is, we sold it I think last week, about a week ago. The current price 94.48, so that has turned out to be an advantageous time to sell, at least in the short term. The latest indicated sell at price 105.54. So ERFSF remains a super growth multi-bagger, and we look forward to taking another position in it. NBIX doesn't currently qualify, although it's close. Until it does qualify, we won't be taking another position. If we take a quick look at my if I could find it here, my master spreadsheet. I use this, I don't generally share this, but just to give you a quick idea of how it works. Neocrene NBIX is currently number 110 out of roughly 3,000 companies in terms of financial statement trend strength, and that puts it over the 50 limit that allows a company to qualify as a super growth multi-bagger. So it's an excellent company. One of the, I think at about 100, that's in the top 3% or almost in the top 3% of all public companies. So an exceptional company. It just doesn't happen to qualify right now. So we won't be taking another position in the company until it does. The trends are all strong. It's an excellent company. Well, I shouldn't say the trends are all strong. Actually, when I think about it, I think that company, let's see here if I can find, no, that's not it. Oh, well. It's actually had some slight decline in free cash flow most recently. That's normal. These growth companies, their free cash flow is affected by capital expenditures and research expenditures, and it moves around. Okay, the week's most significant gainer, Sprouts Farmers Market. We almost sold it today. It was up 16.3% in the last week. the most of any SuperGrowth MultiBagger, whether a current position or potential position. It is about 4% of the risk research portfolio. It was purchased February 2nd at $21.39 and versus the current market $28 roughly. When I wrote it, it was $28.33, but I think it's off a little right now. The algo indicated buy at and sell at prices $23.06, and I think it's actually $28.06. No, excuse me, $29.06. Here, we'll take a quick look at it. Get it exactly what it is here. It's $29.02 is the latest indicated sell at price. Current market $28.08, so it's about $1 below where we would sell at. It got to within a couple of pennies earlier of the sell at price, but didn't quite hit it, so we didn't sell it. Right now, actually, the company closest to our sell at level is Progressive Corporation or Progressive Insurance, trading at $96.56. Latest indicated sell at $99.59. I think we bought Progressive around $88. Average price $87.61. So we're up about 10% on the position. It doesn't qualify as a SuperGrowth MultiBagger. It's another excellent company, very stable, very profitable, excellent management. Warren Buffett describes it as being a constant rival of Geico in terms of profitability and growth. So anyway, we'd be happy to sell that position, and the higher the market goes, the higher we'd like to keep our cash position. Right now, I think we're around 10% of our portfolio in cash. I'd like to get that up to about 20% if I could, but I'm not going to sell something at below the algo indicated price just to build up cash. There'll be plenty of opportunity, and this market could, of course, go substantially higher. So, all right, here we'll get back into our report. These are the financial statement trends of Sprouts Farmers Market. Very strong free cash flow and return on assets. You see, that's somewhat driven by COVID. People are spending more money in grocery stores and less money in restaurants, of course. How permanent this is remains to be seen, but it's an excellent company. Financial strength trend, excellent and undervalued, according to our analysis. Here we'll take a quick look at free cash flow versus revenue growth. Revenue growth very consistent. Free cash flow has taken off, and I think that can generally be attributed to economies of scale. As these companies grow revenues, each sale becomes more and more profitable. After they cover their overhead, and their fixed costs, their employees' costs, and facilities, buildings, rent, etc. Each added dollar of revenue is disproportionately high margin. Looking at the price algo, shows buys down here in March of last year, sells on every, the stock has this tendency to soar occasionally and then drop down. The algo recognizes that, and when it sees the stock take off, sells positions. In here, though, we bought on a decline, and then roughly 3 months later, sold at almost exactly the same price. Bought at $24.47, sold at $24.78, so almost no profit at all. But then a few weeks ago, we took a position at $21.39, and as you can see, the stock's taken off, and the algo's getting ready to sell it. So an average holding period of 55 days, average profit per transaction 15%, return annualized at 102, and distance from buy at $16.90. All these prices. When I prepared this, I think it must have been over the weekend. Yes, that That I remember that was the indicated sell at on Friday at the close, but as stock has been strong today, and this has also declined somewhat. So, all right, the biggest loser of the last week, Gray Television, down 11%. Still not low enough to hit our indicated buy at level of 15.29. Current stock price, well, at least when I wrote this, was 18.16. It's roughly that now. Fundamentally, the trends are strong, but not spectacular. The stock appears to be significantly undervalued. It's difficult, I think, sometimes for investors to believe that traditional television stations are as profitable as they are in an age of streaming, but they can still be quite profitable and quite consistently profitable. If we look at the algo generated buy and sell at levels, it bought on a steep fall, sold a few days later, early last year, then bought in stages as the market decline continued in March. And then on each strong rally, it sold part of the position and finally got out in mid-May of the entire position. So right now, trading at around 18.67, the current buy, still quite a bit lower than the current stock price. So although it's declined a lot, as I said, it's not yet in our buy zone. Take a look at Perkin Elmer. It's a little, I'm a little nervous about this as a SuperGrowth MultiBagger. It certainly qualifies. It's number 3 after Advanced Micro Devices and Alpha ProTech in terms of strength of cash flow and financial statement balance sheet and strength of balance sheet trends. The reason I'm a little nervous, they participated, their diagnostic kits are widely used during the COVID pandemic. How long that's going to last, I have no idea, but they're very diversified. They don't just have that. They have a lot of other products, but of course, their COVID test kits have been a major driver of sales growth lately. I considered removing it from the SuperGrowth MultiBaggers, but reading the CEO's bio, he's new. I like new management if they're highly qualified. He took over as CEO December 30th, 2019, and prior to that had several leading positions in the company and positions, of course, of divisions that ended up doing extremely well under his watch. So, and he's certainly highly educated and qualified, and I'm looking forward to seeing what he might do with the company. We'll take a quick look at the buy at and sell at levels here. Again, buying in March, early in the year, selling on rallies. The algo has not indicated a buy at since, the last buy at actually here was right down at the very low in March, and then it sold at prices that in retrospect appear too low, too early. But that's how this works, and we have a number of subscribers that just ignore totally the sell at levels, and that's fine. That's back tests. Ignoring the sell at levels don't generate as high annualized return, but they generate as you can see in this chart, plenty high return. So the last purchase was at 127.67, and the stock's currently trading at roughly that, down $1 from what we bought it at. And it's the current indicated buy at is 113, so like $14 down. Sell at 138, so $11 up. You find that the more stable companies are in terms of their stock price, the closer this buy it and sell at will be, and the more volatile the algo backs off in terms of its bids. All right, so I think that pretty much covers it for today, and thank you for your interest in this work and for tuning in.